stock of the day is Resmed. It's reporting season, as most of you well know. And so we saw the company posting an 8% rise in full-year revenues, driven by the ongoing recovery of its core sleep apnea and patient flow across the business as well. COVID-19 is, though, continuing. The company annualizing $125 million in COVID-related ventilator sales from this period in 2020. CEO Mick Farrell telling ausbiz that 12 to 18 months ago, the company did a major pivot to produce those ventilators, but it is getting back to its basic business model, and it seems to be paying off.
And in the peak of this now, I would call supply chain limited growth of our industries. We get back and markets open up post-COVID. One of our competitors had a major recall that has produced unprecedented, almost unlimited demand for Resmed products. And we are doing everything we can to open up our supply chain and be able to take care of those people with sleep apnea, COPD and asthma that need our therapy. And on the earnings call that we just finished, I publicly said that we expect to have somewhere between $300 and $350 million of incremental revenue from these opportunities.
So here's a quick check on the instant reaction to that reporting season update from Resmed, down by 1.5% at 12 noon on this Friday. So if you'd like to listen to that interview in full, guys, with Mick Farrell, it's up on the website. But look, Rudi, I'll start with you because, we'll get the deluge coming from the brokers. I've seen RBC Capital's first take saying that the first impression was strong for the fourth quarter, but thought that the additional revenues that the company is flagging in relation to that Philips recall could disappoint the market. So that's RBC Capital. But I had a conversation with John Lockton from Wilson's Advisory saying maybe not so fast, because in his experience, sometimes these recalls, companies take a long time to recover from these recalls, to pick themselves back up, get to previous levels. So it could be actually a longer lasting positive impact for Resmed. What do you think?
Yes, I think this share price weakness, I think, I also saw that, for example, the market has reacted in a negative way to REA's results as well, by the way. So both stocks, both companies report actually an excellent result, but share price response is negative. I think this is a difficulty for investors to always predict and to assess what exactly is the market response to an actual result. But I think investors need to distinguish the short term from the longer term here. And I don't think it's very clear what exactly has disappointed in the Resmed result specifically. What I do think is probably playing a factor here is that if you look at the share price, this is a longer term share price, but if you look at the share price over the past week or so, you'll find that the share price has rallied quite hard leading into the result. So it may well be that simply some people are here taking profits on the fact, because that gives you a better idea how strong that share price has rallied recently. I would say if you are a longer term investor, don't be put off by the fact that the initial response to the share price is negative. By the way, the share price was negative earlier in the morning. It's already recovering some of that losses. I think if you have a longer term view, what you should concentrate on is this is an incredibly high quality company. It has an incredibly strong market performance. One of the themes that I've been highlighting for this reporting season, and I think which will come to the fore on multiple occasions, is that everyone is focused on what COVID does to corporate Australia. And one of the things that COVID is doing, it is making the stronger. And Resmed is a very strong company in what it does in that particular sector. And the fact that now one of its competitors basically ended up in trouble is, to me, more evidence that the strong are getting stronger. And that is one of the themes that you can play as a long-term investor in this reporting season and beyond. And I think that's certainly something that investors should focus on. Should you buy Resmed at this level, I still think you shouldn't be chasing it, because it really has had a very strong run-up over the past few weeks. But you know what? If you have a longer-term view, maybe the best way to illustrate how you should treat those stocks is someone on Twitter said recently, if I overpay for a growth stock like Resmed, I might have to wait 6 months to get my money back. If I overpay for a value stock, I might be forced to wait 6 years. And I think it's a little bit facetious, that saying, but I think it applies to stocks like an REA and a Resmed and a CSL and some of those other high quality stocks, of which many are in the healthcare sector. It's always difficult to pick what exactly the point will be, because they never get really, really cheap. But if you are a long-term investor, you end up with a big smile on your face when you have those stocks in your portfolio.
So would you buy Resmed today, or you'd be waiting for a pullback of some sort?
Yes, and I have to say I am a shareholder in Resmed. Yeah. It's quite a big position. And I intend to stay on board for a very long time, and I have been, and this is why I wake up every morning with a big smile on my face.
So that's a solid hold from Rudi. John Lockton, I'll reference him again. Claude still saw value in Resmed for many of the same reasons, quality company, et cetera. But he is cognizant of the run-up that it's had lately, but said, if you're a long-term investor, it's still not a bad time to buy.
And that's
Claude?
Yeah,
go, Claude.
You pick your point.
Well, yeah, Rudi said it, and I largely agree with that. You can pay up for high quality businesses without risking the kind of disaster that can occur to you when you pay up for lower quality businesses or businesses that are all story or meme stocks or hype stocks and that kind of thing. And Resmed is a high quality business. It's got a long history of growing earnings, and what's more, it's not standing still either. One thing that sort of stood out for me for the interview that you guys had earlier was how they talked about serving the much larger asthma market with cloud-connected pharmaceutical drug inhalers. That is the kind of thing that actually probably could work. And you get a lot of hype stocks, meme stocks that have absolutely nothing to offer, that consistently have some sort of cloud-connected gadget that's supposed to help asthmatics, and it's always just a story. But this company, if you want to sort of invest in that kind of tailwind that, you have more obesity, you have more old people, you have more sleep apnea, but then they also go into other respiratory diseases like more like asthma and stuff like that, which is a huge market, because there's also, this epidemic of asthma getting worse for reasons that are sort of debated. But these are long-term tailwinds that should be in favor of the company. So perhaps you can afford to pay up. But having said that, let's just look at a few numbers for a minute. If we take their non-GAAP earnings, so that's the earnings that exclude things that management thinks don't show the underlying business, it's still 50 times that. So it's trading at a PE of 50 times those management earnings, not to mention the actual statutory earnings that are lower. And on top of that, the operating profit was up 8% this quarter. So that's not a lot of growth for a fairly high multiple. So it wouldn't seem obviously cheap to me. It doesn't scream opportunity to me, but this is, as I say, this is a classic father-in-law stock. My father-in-law does own it and has for a long time, and he's done very well out of it. And it's been a star performer, but in part because it's had this good fortune recently, right, of the Philips recall. And if we go back to the Cochlear story, where Cochlear had a recall in 2011, the share price plunged, but that would have been a great time to buy. So if you want to sort of be a little bit contrarian to the market, perhaps, you've seen that gain, and maybe there's a little bit more to be gained, for sure, but that doesn't necessarily mean now is the best time to buy. So I basically agree with Rudi.